Hey family, welcome. In today's session, I'm going to break down something that really helped me level up in trading. Okay, that is order blocks and liquidity. So, if you have ever wondered how smart money actually enters and moves the market, right? This class will open your eyes. I'll make it simple, practical, and easy for you guys to apply. So, without wasting much of your time, let's just jump right to it. Are you guys hearing me? Without wasting much of your time, let's just jump right to it. So, currently I'm in the Euro USD 1 hour time frame, right? So first of all, let's know what is an order block, right? An order block is the last place where smart money, that is, smart money are like banks, all these institutions, hedge funds now, enter the market before price made a strong move. In that is for a buy market though, it is usually the last bearish candle before a big bullish move, and for sales, the last bullish candle before a drop. And we have two types of order block. We have the bullish order block and the bearish order block. As I said earlier, the bullish order block is usually what the bearish candle before a big bullish move, and the bearish one is the last bullish candle before a drop. That's the bearish order block. So for example now, right, let's say price is going sideways like this, sideways, that is consolidating, right? And the next thing, right, you saw something like this, like this. Price broke out. Yes, it, guys. Mhm. The candle, the red candle, there might be a red candle around here. This is a consolidation phase. Let me just use a box to just show it. Can just say accumulation. Accumulation is also known as consolidation because price is accumulating, right? So if you see price going sideways like this, then you see a small red candle followed by a strong bullish move. This movement here now, that red candle is likely to be what the bullish order block. The red candle might be around here. Let me just draw something for you guys. I'm not that good at drawing, but let me just try. I'm not that good at drawing. So this is the red candle, the outline. Let me remove it. Then it still should be 100. Let me remove it. Let's see. Then you see something like a week, right? So if you see something like this now, guys, around this zone now, maybe let me say around this zone, and the market did this kind of move. You see this candle right here, the last bearish candle. This is what you call your order block. You can just mark it maybe with a rectangle. Let me make this stuff ash. Then reduce the opacity so you guys will be able to see. It's okay at 20. You see this stuff right here now? You can just call this an order block. If you see something like this, for example, I'm just showing you guys example. As I said, I'm not that good at drawing. I kind of reduce it. So if you see something like this, right? This is the order block that caused what this break of structure, because price broke structure within this zone, right? If you see this closely, price broke what structure. Let me remove this accumulation fee stuff. price broke structure within this zone. So we had what a break of structure here, that is BOS, as we said earlier, right? So this right here is what your order block is what your order block. So there's something I want you to know about order block. It's like you see order block is like someone now, for example, right, buying a fuel at a low price before it increases. That zone, right? That zone where they bought becomes a powerful level. So you see now, it is just like I bought within this side before what price increased in a bullish movement, right? This zone now that I bought, it becomes what a powerful level. This zone here that I bought becomes a powerful level, right? So you guys should try to practice all these stuff that I'm telling you, right? So this is a bullish scenario. Let's talk about a bearish scenario. Example now, you see price in this kind of maybe ranging or accumulating or consolidating. All they are still correct, right? Anyone you see, they are still correct. Then you just see this kind of move. I just broke out with what force. I mean, this stuff is not that, but let's just use it. So if you see something like this now, within this zone, as I said, within this zone, right, there might be what an order block that led to what that break of structure. You see this zone right here, that price broke. Let me show you guys. See this zone right here, that's price broke. There is another block here that led to this break. Another block here, right? Except if you pay attention closely, that is when what am I even doing? This should be black, then this should be red. Okay. So within this zone here, let me reduce this opacity because I noticed as if it's too much. The the shape is too red somehow. Within this zone now, in this bearish scenario now, this would be a bullish candle. I did mistake. That is green. This would be a bullish candle. So in a sell market now, right? In a sell market, it will be what a green candle. So this candle is the one that caused the break of structure. So this is what you call an order block. I'm just showing you guys like in an example before we go right into it. So you see, currently at this one, price was what accumulating. You are seeing it. Price was accumulating before it broke this low right here. Before it made what a break of structure. That is BOS. Yeah. So this is the bullish scenario, then this is the bearish scenario. So let's just jump right to it. Let me select it and delete. So let's jump right to it. Let me look for an example. This is all we talked about in our last class. Let me delete it. Excuse me, guys. We have an example of an order block here also, but let me find a more better one. Yeah, let me use this one. So if you guys are looking at this, what did you notice? You notice what a break of structure. This is the low, right? This is the low. Then price did what break this structure. So this is a valid what break of structure. This is a valid break of structure. So if you look closely, you will see the other block that led to this break of structure. We are in the 4 hours time frame, so it is quite big. Let's zoom into the 1 hour time frame so you can see for come in, let me delete this. Let's go back to that zone that I marked. Yeah. So in a what bearish sense now, if we want to okay, in the 1 hour time frame you can't spot it like you can't spot it very well. So let's zoom into the 2 hours time frame. Okay, in the 2 hours time frame you can see it very clear. So this right here, right? I say that in a what bearish market, it is the last bullish candle before a bearish drop. This is your bullish candle right here. You are seeing this candle, this green candle that I'm marking. You are seeing it, right? Look at the candle here. Let me use something to mark it for you guys to see. You're looking at this candle, right? This candle that I marked red. So this is the last one, bullish candle before this bearish movement, right? So if you notice it, this is what an order block. An order block is valid when what it breaks structure firstly, and what it created an imbalance. This is an imbalance, guys. Price need to come back and fill it. This space from you see this an imbalance is a three candle formation stuff. So you see this candle with this first candle, right? This red one right here. Let me remove this red stuff so it won't confuse you guys. So this candle that I just marked now, and the last one, and this one, right? If you notice, there's what a space. There's a space in them. This big space. Let me use this rectangle to mark it. You are seeing at this big space that I'm marking, right? So this big space is an imbalance, IMB, or you can call it FVG, FVG. That is what fair value gap. I create my text to be in center and inside like this. You see, right? This is an fair value gap and what also called imbalance or inefficiency, anything that you call it, right? And also, if you zoom down to the lower time frame, you'll notice that price did what created liquidity. Price created liquidity at that zone, but at that point we are in a higher time frame, so we won't be able to see it clearly. But let's get back right to it, so I'll show you guys what I'm talking about. Network is quite bad, but not that bad too, because we can still manage it. So if you notice what this is what an imbalance that price created. Okay, in that time frame is quite big. You can just use this one to this one. So I use what a higher time frame fair value gap. So as you noticed, guys, this is a what a fair value gap, right? And this is where price went back to mitigate what the other block. If you notice, price went back to what mitigate our what other block, that is OB. So as I said earlier, guys, I said other block is what is the last place where smart money, like the banks or institutions entered the market before price made a strong what move. So this is our order block. So the abbreviation for it is just OB center. And write it. This is not the place I want to write it now. What's wrong with this keyboard? So order block. So this is our order block. So as you are looking at it, price went back up to what mitigate this order block, right? So let me show you another example from order block. This is for a bearish market, right? Let's go to a bullish market. That's for a buy. Now let's look for a buy market. Okay. Okay, this is a valid order block, but what price did not come to that price did not come back to mitigate it. This right here, you can use this as your what order block, but price did not want to come back to mitigate it because it is the one that caused what this break, this break of structure. I told you that in an order block, price needs to what break structure or change of what character. So this break of structure now that you are seeing here, it is that order block that led to this break of structure. It's not every other block that price react to. You get Forex is not 100, so maybe every other block is price they react to. So let's move my scoring myself at this time. I don't know how much access. Let me just zoom over to the 4 hour time frame. So it will be very fast for us to spot it. Let's jump back soon. You see an example of what another block, right? You the network. And this also is another block. See me said we're getting at the find really very close to me. But this is also an example of a bullish order block. If you notice the other block that price used to mitigate this first one, right? As far as mitigated it, are you guys hearing me? Are you guys hearing me? I'm waiting for your response.
Yes, sir, we are hearing you.
I noticed the network was kind of fluctuating. That was why I asked. So this also is an order block. This also was is I said an order block is the last if a bullish order block, right? Is last bullish candle before a bearish move. If you notice the break construction, as you are seeing right here, this is where we had what the break of structure. So the other block that led to that break of structure is simply this one. If you notice, price came back to mitigate it, and again look at the imbalance that it created. Look at the imbalance that is created. As I was saying, give me let me say some seconds. Let me plug my I think the battery is down. Let me just stretch up and plug it. Battery is down. And it will be very bad, very bad if it's off. So yeah, I'm done. So as I was saying, right, if you look at this closely, this also is an order block because this candle right here, you are looking at this green candle. As I said earlier, the bullish order block, right, is the last bullish candle, right, before what a bearish move. So this is the last green candle, right, before price. This drop that you're seeing over here, that price did, right? This is the last bullish candle that caused it, that led to what this break of structure. So this is a valid order block. So let's move. This also is a valid order block because order block. Let me shape this thing upward. Let me tell you how, guys. Because if you notice, I told you that if a candle closes with a wick, right, it is not a valid wick, right? So if you are looking at this now, you know that that is not a valid wick of structure. So this is a valid wick of structure, guys. Here, you are looking at it. This right here is a what? Valid wick of structure. So the other block that causes valid wick of structure in this bullish movement now, this is it. We're on the 4 hours time frame, guys. Don't forget. So this is the other block that what caused this break of structure because of I say that in a bullish move now, right? The last what bearish candle, which is this red candle. Red is bearish, that is downtrend, right? Then green is bullish, that is uptrend. So the last what bearish candle before it break, that is what we call an order block. So if you notice, this right here is an order block, and price came back here to mitigate it. Mitigate also means tap. So price come back here, come tap am. And I say am back. Then if your target is this high, probably what you hit take profits. We are seeing it. So this is an example of what a bullish order block. Let me find another example to show you guys. This also is a bullish order block. But if you want to spot it very well, we'll zoom down to a lower time frame because this is what caused the break of structure. If you are seeing it clearly, this is what caused the break of structure, not the down one, this one right here. So price came back to mitigate it. If you notice, before breaking what this structure, because this right here is a what break of structure. Let me show you guys. You are seeing it, right? So this is a what break of structure. So and this is what an imbalance from this candle to the candle of the order block. You can just use it as a what imbalance, which is inefficiency. I say an imbalance is a what three candle formation, right? Let me show you an example. And then we have in a bearish move, in a bearish move, have another candle, and we also have another candle, right? Let me say we have three candles like this. Then you now saw something like so you guys are seeing, you guys should pay attention closely. Then this is the week of these three candles. Let me say this is the week. Let's say this is the week of this candle, and this is a what red. Red and also what red. I'm just using an example for you guys. Um, this one is not red though. This one don't go big. Need to hide the opacity. So red, red, what and red. So in this three candle formation, right, that you are seeing here, I don't like the way this black stuff is just long. I don't like it at all. Let me make it look exactly the way a candle is, please, guys. You, uh, what's wrong with this thing? No, without wasting, without wasting much time, let's just get right to it. You see the week of this candle, let me just use it like that. The week of this first candle, right? between the width of the first candle and this third candle, there is a space, right? So this space that you see now, this space that you are seeing, right here, let me change this to an ash. It will reduce the velocity to 10. So you are saying this space that you are seeing now, right? This is what we call an FVG, or imbalance fair value gap. So you can say FVG. This is the abbreviation. Why the long name for it is fair value gap. So you see, this is an abbreviation, that is FVG. Then this is the meaning of what fair value gap. So if you say three candle formation like this with a space in the middle, right? This is what we call fair value gap as an SMC trader. So there must be what fair value gap in your entry criteria and also liquidity. But we are going to talk about the liquidity aspect. So without wasting more time, let's just move to the liquidity part of it, right? Let's just move to the liquidity part of it. So firstly, what is liquidity? Liquidity now, let me zoom out of this. Let's go to liquidity. Liquidity is where what there's a lot of money. Definition of liquidity. Liquidity. So you guys can pick points. Let me write it down for you. So what did I say? Liquidity is where there's a lot of money, right? Sitting in the market. Sorry, let me bring this. Sitting what in the market. I'm not done. It can be usually where like many retail traders, right? Many retail traders back here, like me and you now, like me and you, like those guys funding maybe $50, $100, 1K does you get, for example, $10, all those stuff. Those ones are what we call retail traders. Like let me just say brackets me and you, right? Place their stop losses. So now, but place their stop losses. Now, but the smart money. Sorry. The what is this? I have to go back to this USD, Euro USD. Place their stop losses. Let me place. So smart money now hunt these areas to grab that liquidity before making the remove. So this is the definition of liquidity. So liquidity is where there's a lot of money. It's just like money now. When me and you enter a trade at a particular zone, let me draw an example for you guys. Maybe you see something like this, right? And me and you entered at this zone. Maybe there's an other block here, and there are many people that entered at this other block. Many people, like plenty of people that enter at this zone. So this zone now that we entered, right? And our stop losses are here. Let me say here, right? Let me draw this line. So you see this line right here, this black line. This is our stop losses, right? That is where what we set our stop losses. So there's a lot of money sitting at this place because most of us, once price pass like hit this place, it have taken us out, right? And what we have lost, like we lost the trade. So smart money now we now hunt for all these stop losses, all these areas of stop losses, right? To grab liquidity and before making what the real move. So So for example, price might move like this. Let me say price want to go up. It might um let me delete this. Let me use this. The price might do something like again. As if it wants to go up and tap and just make it move ASAP and take us out and go the main direction. You get and go what to the main direction. It will first take us as if it's going our direction here and just take all of us out and go to the main direction. So that is it for what liquidity. Let us emphasize more on it on the chart. Let's let's look at live liquidity. For example, now, right? We are seeing this one right here. We have equal highs and equal lows. All that are liquidity. If an example of an equal high is let me show you. Okay, you if you're looking at these two highs right now, these two highs, this is an equal high. This is an equal high. Let's zoom into a lower time frame. You know what I'm talking about. This is one that I marked. Here's the one I marked. Mm-hmm. This is the zone that I marked. You are seeing this, right, guys? Hope you are seeing this. So if you are looking at this chart now, you know that what's wrong with this people? Um, mhm. I'm going. So let's get back to the chart. So if you are looking at this kind of scenario now, this is what we call an equal high because the two highs are what equal. This one now is not that equal, but it looks equal. So if you see a two high that is what equal, we call it an equal high. That is, the abbreviation is EQH for equal high. That is equal high, right? Equal high. And we also have what equal low. Equal equal low. So it is the same thing, just that in different ways. So if you see something like this, for example, right, and you see price come down, right? This is an example of an equal high. Let me just reduce it. This is an example of an equal high. Why? Because of if you are looking at this zone right here, right? This high and this high are equal, and in a bearish market now, you look at this low, for example, like this, right? This is what an equal low. Why? It's still the same thing because the two lows are equal. These two lows now are equal, so this also is called an equal low. That is UK. That is let me write it down. EQL. That is equal low, right? Equal low, equal high. So they are what types of liquidity. Equal high. There are types of liquidity. We also have what the trend line liquidity. Trend line liquidity. If market is in a trend, let me say uptrend, for example, like currently now you are looking at this market. This market right here is trending. Let me use this one now to just mark it. Let me say I want to mark it like this, just like this, and let me say further. So if you look at this trend line now, right, price is what reacting reacting to what the trend. If you turn it to line, now you notice it clearly. Likewise, you are reacting to the trend. Look at the first tab here. Look at the first tab, right? Look at the second tab, and look at what the third tab. So if you are looking at this in this kind of scenario, okay, let me write the type of liquidity. And this is my battery service kind of slow. So the types of liquidity. Thank you for telling me. So the type of liquidity, right? We have what we have the trend line liquidity. Trend line. Once you see LQ, it means the liquidity, guys. Let me just write it as one example. You guys are seeing it. Secondly, we have what equal highs or lows, right? We also have previous session. Okay, this one is true. We also have previous session highs or lows empty. We also have above, right? Let me see, four above or below support slash resistance. That is all resistance zone. You see all these parts. ETC, they are still much, okay? They are still much, but with time you understand all of this. But currently, let us deal with this first. So you have trend line. Trend line is this that I'm showing you guys here. You are seeing it, right? This is what trend line liquidity, because price is what reacting. See, if you notice, price went up and react to what this zone. Price went up again and did what react to this zone, and went up again and react only to this zone before breaking that zone. Then we also have the equal high and equal lows. These are the equal highs and equal lows. You are looking at it. If price creates what an equal high, the two high is equal. It is called an equal high, and for a low, the two low is equal, right? It is called an equal low. So we also have what we also have, what do we call this, previous session highs or lows. This one are for, like, for example, London sessions, New York sessions, and so on. Thank God. Thank God. I was just wondering how I would plug my laptop, because my laptop is fucking. So I just got the lights. So let's continue, guys. So, and we also have what previous session highs or lows, right? So previous sessions, you guys already know that London session in Nigeria. Let me write it down. You guys should know too. In Nigeria, right? That's our country, our basket country. So in Nigeria, London session, um, London session sessions in Nigerian time. Yes, and the Forex sections time. So London session, right, usually start around 8 a.m. in the morning. in Nigerian time. So from 8 a.m. now, so you see this 8 a.m. now, right? To 5 p.m. To 5 p.m. Let me write to 5 p.m. 5 p.m. 8 a.m. to 5 p.m. in the evening. So this is the time that London session usually starts. London session starts when 8 a.m. to 5 p.m. in the evening. So these sessions now too, that is usually sweep liquidity. Let me show you an example. We have the Asian session, we have three types of session. We'll soon talk about that. But let me just tell you guys, we have what? 3 to 4 type of sessions for sure. I will not talk about the four. I will only talk about the three. So we have 3 types of sessions in forex trading. That is, we have the London session, right? We have the New York session, and we have the Asian section. For those of you that are saying Tokyo, Asian section is also known as Tokyo session. So it's also known as Tokyo session, right? And we also have Sydney. No need for me to. Let me just write it. This Asian, Sydney, and Tokyo, they are almost the same time. It's just 1 hour difference. And Sydney session. So these are the type of sessions we have in forex trading. We have what? The London, right? The New York, right? The Asian, which is also known as Tokyo, and we have what? The Sydney sections. So I will not emphasize on this. I just wanted to give you brief something on it. So as I'm saying, that is it for previous session highs or lows. So I wanted to give you guys an example. Like, let me go to the live chart, today's chart, right? So you guys are seeing this in Nigerian time is 16 o'clock, that's 4 o'clock, right? And Asian section usually starts by 11 o'clock in the night. So this candle here is 12 o'clock. Let me just use this candle high. This candle high now. Because this candle formed at 1 o'clock. So this is the Asian high, the highest high that Asian created, right? And before London, this side is already 11. So this is the highest low that what Asian, the lowest low that Asian session created. So the high and the low. So if you notice what the price do, in the London session wanted to start, it went downward to sweep this low. So it went down to sweep this low. So London session, this is around 8 o'clock. Immediately at 8 o'clock, because I told you guys, you see 8 o'clock to what? 11 o'clock. Price went to sweep this low. So this is an example of what session liquidity, like when price sweep a high or low in the previous session. So in London session and price went to sweep Asian low. Me, I don't normally use indicators on this. I'm already very good at it. So like I've studied a lot on all this. So the third one is what did I even write here? Said the third one is above support or resistance. You guys already know what is a support or a resistance level now. Let me show you an example. Because we are SMC traders, so most of you don't know what is support or a resistance. Let me carry this down or up instead. So if you see price in a range like this, let me say in this kind of price is moving this way, you are seeing it as if it's consolidating, right? So most people will just come here, like all these price action traders, they'll just draw one line and call it what is support, and draw another line below and call it a resistance. So at this zone too, this is also liquidity, because price will come and sweep it. Okay, price will come and sweep it. Some, if market do like this, some of them do call it take out or something like that, but this is a liquidity sweep. Price did what? Swept liquidity. If you're an SMC trader, you know how to analyze this. Swept liquidity, and maybe there might be an order block here, right? And price used it to what? Push lower. You are seeing it, right? And price used it to what? Push what? Lower, and maybe targeted this low right here. So support and resistance zones are also what? Liquidity. So those are the type of liquidity where there are more, but like if I say I want to talk about them for this class, maybe we know we'll finish today. So if a lot of traders, right, are buying and putting stop losses, right, just below a recent low, smart money might push price down, like the way price did here now. Let me say you bought here, right, and your stop loss is, let me say here, right, and you are targeting big zone, and price haven't gotten to your what? Take profits. Smart money might push this price downward now to take you out. You are seeing it, right? It will take you out. That is hit what? Just stop losses and then reverse back up to the direction they want it to go. Maybe by then you don't really need the cry. So think of it like a trap. Liquidity is just like what? A trap. The market tricks people into entering early or too confident. You'll be confident, let me just enter this trade. And price will now what? Sweep you guys out before going in the real direction. So that is how liquidity works. Now let's talk about how other blocks and liquidity work together. Like I want to combine the both of them now. This class is not supposed to be this long, but you know that Saturday and Sunday we didn't do class, so I just combine the stuffs together, teach you guys. So mixture of what? um Other block and liquidity. So let me go to gold. I love analyzing gold. Or since we have already started here, let's just continue. Gold is my best friend. So first of all, let me see. You will use what? Your higher time frame to look for buyers, guys. Don't forget, use your higher time frame to look for buyers. So this stuff that you are seeing here now, let me just move out to the 1 hour time frame. Excuse me. Why is supposed to have this stuff? And price did not. Okay, price did not. So let's move. Let's just use this. For example, now if we are looking at this, right? We are in the 1 hour time frame. If you notice, after price created this order block, this right here is a liquidity. You see this one now? This is a liquidity. It can be also called inducement. You guys are seeing it. Inducements are thick. Let me write it down. Inducements. Now, what are inducements? Well, I don't talk about entities. I don't really say if I want to talk about. So, inducements are thick supply or demand. Supply or demand. A fixed supply or demand, or the market is to lure retail traders into what? Entering no entering. So this is a brief explanation of investments. I don't want to waste more time. That's why I just made it quick. So this is an inducement or a liquidity. Anyone you can call it liquidity. So what the price do? Price sweat it, right? Price sweep this liquidity. Liquidity, you can just put dollars for it because it's money. So most retail traders now they'll be like they want to enter at that particular zone, at this zone here, right? Most of them, if you notice this green candle first went up and reversed, started coming down. So if you zoom into this to the lower time frame, you see what I'm talking about. As a trader, right, don't just analyze on one time frame. You need multi time frame analysis. Okay, you need what multi time frame analysis. It's not bad, it is not wrong. You need it. So what the price did here, let me show you guys exactly what the price did. After it tapped into this liquidity, right? You guys are seeing it. Price did what? Reversed. Let me zoom in so you can see these people. They are very smart. You are dealing with what? Highly smart people. So you need to be what? Very smart. These people they are very smart as I'm telling you. So price did what? Reversed backward. If you noticed, this is a reaction. These two candles are rejection. You are seeing that it rejected. On a lower time frame, you see that it is a red candle. So let me remove this. So on a lower time frame, you see that well, this is a red candle because after tapping into that liquidity, it rejected. So most of them will go short. They will start selling from here. If price is going down, just set their stop loss above this high like this, right? Exactly here. And maybe they will be targeting this low, right? They might be targeting this low. And what the price do? Immediately price took them out and went what? The main to the main order block. This is the main order block. What did I do just now? Mistake. Price went to what? The main order block. This is for short. Let me take it. So this is the main order block that price went to, and it was make what the right move. So most of them they don't use multi-time frame to like analyze. They're just based on one time frame. So you need multi-time frame, guys, if you want to analyze, right? And you need a stronger bias, which I always talk about, a higher time frame narrative. So if you noticed here now, if you are scalp this market, if it was me, I would have scalped this market and it would have given me a much better risk to reward ratio. So you see, if you targeted this low now, price did what went to take the low around here. So you would have hit it around the zone right here. Right? So this is an example of what a liquidity and an order block. So this one now after price break structure, you want to see what an imbalance. An imbalance, guys. This is an example of an imbalance. You are seeing it, right? This is an imbalance. So most of them think that this is the correct imbalance for them to enter, but this is not the correct imbalance. This is just a what inducement, that is a liquidity to lure traders into selling. This is the right order block. Even same with this one too. Because if you notice, this is the main order block. Let me scalp it for you guys to see. We are on the 15 minutes time frame, right? Look at the main order block that led to this break of structure right here. Fuck, what did I just do? So let's just go back gently. I mistakenly did what? Left that place. So yeah, we are back. So this is it. This is it, guys. This class is taking long. So this is what an order block. If you notice, this is the correct order block, this bullish movement. So if you notice now, price went what up immediately now to mitigate what this order around here. Price will tap you in. Is it due to bad network or what? Okay, his network that is bad. I've already set the limit there, so let's just go back. Let's just go back when we are there, guys. Network is quite bad, but that won't hold us back on today's class. That will not be an excuse because it's not genuine. So let me zoom out so that it will be very easy because I want to use this to keep. So guys, let's continue. Are you guys hearing me? I'm pretty sure that yeah. Let's continue from where we stopped. Mhm. So let me go back to that zone. Yeah, this is the zone right here. So as I said, right, what did I say? I said that like there must be what liquidity within your point of interest. If there is no liquidity, it is not valid. On a lower time frame, this candle that you see here now, but most traders will think this is the right order block. This green one right here, because it is also what a bullish candle within what a bearish move. So most of them will think that this is the right order block, but this is an invalid. Let me write it. An invalid OP. So it is not valid. We normally use the extreme order block, which is this one. So this one is the extreme order block. It is the one that first break this low. Look, there's a low here. Sorry, I did mistake. You see this low now. That other block is the one that broke what this low. So the upper one is valid, which is this one. That was why price used this. Also, this as liquidity. In all your entries, look for liquidity. Let liquidity lead. Okay, that was my old bio last year. Let liquidity lead because if I don't normally see liquidity back within my point of interest, no matter how strong or interesting that is, I don't used to trade it. So as you are looking at this coin, this is what an invalid order block. That is what an inducement. You can just call it an inducement, and the color should be red so that you know that it is bad. I mean, not the text, not the text. The text should be black. I don't even talk about the text. The body, that is the background, should be red so that you know that it is invalid. It is not valid. So this is where price swept it, right, and took us in. If you notice, if you placed your order here and set your stop loss, and maybe your target might be this low, price will surely take it. Price will surely use it. This is a 1:7 trade, right? This is a 1 what ratio 7. If you notice, price went down, come and hit it over here. So what you hit what you take profit. So this is an example of mixing both an order block, right, and what a liquidity, a liquidity and an order block. And this is also another example which I showed you guys. So how to spot and trade it. Let's talk about that. I've already told you guys First of all, you need to identify areas of liquidity. That is your equal highs, equal lows, trend line support, resistance, right? And look for what nearby valid order blocks. It might be, let me just draw a line for you guys to understand. Let me say in an uptrend now, right? Price is going up, right? And price tapped the order block and went up. You see something like this. I drawed it without even seeing it, and it went exactly the way I wanted, right? So you see something like this now, right? We had a break of structure. This is in a continuation trend, right? End price is what continuation. We had what a break of structure right here. I wish I could reduce this thing if I could reduce it. So we had a what break of structure. Let me zoom in. So you guys are saying is BOS for what break of structure, right? So after price broke structure, afterwards, price broke structure. What did he now do? He went, he pulled back. I told you there's an order block that led to what this break of structure might be within this zone. Might be within this zone, right? You don't know. So let's mark it as ash. So what did now price? The price came back down what to create liquidity. This right here is the liquidity. It can be like this, right? It can be like this. You can see it like this, right? Then this right here might be your order block. Text order block. This is a normal entry. You can also see it like this. That is double lows, right? And go up. This is an equal low. You are seeing it. This is an equal low kind of market. And exactly the way I drew it. So this right here, order block, right? Might be here. Which price will tap at this zone, right? And this is what an equal low. UTL equal low. And same applies to what an uptrend. And this is a break of structure. You guys already know of this. This is a break of structure. BOS. So same applies in a bearish move, right? So let me just delete all of this. Let's get right into the chart. I don't want this class to reach 11 o'clock. So advice that I want to give you guys is that you guys should not chase trades. Okay, don't chase trade. Let the market come to your areas. Be patient. Be very what patient. Smart entries always beat fast ones. Okay, smart entries always beat fast ones. Common mistakes you should avoid is marking every candle as an order block. Okay, use only the valid ones. There I told you guys the extreme order block. If you see in a bullish move now, you see a candle like this. Let me say broke this structure, right? And it pull back, and you see something pull back. You will come back and tap the real. Let me show you something. This right here, this this right here now is not an order block. This right here is not an order block. You are seeing it. It's not an order block. Maybe the main order block might be what at the bottom, which is this one. It is always at the extreme, not the top. Okay, look at it. This is the main order block. So always use the word extreme order block. Don't use the upper one. So also guys, once entering just because of a liquidity gap, right? You don't only you cannot just enter trade only because of you see a liquidity gap. Always wait for your confirmation. Wait for extra confluences like break of structure, change of character, imbalance. You get Liquidity also don't just enter based on only liquidity, so wait for extra confidence. Ignoring market structure, that is very bad. That's where most of you make mistake. You don't use a higher time frame narrative like your bias is like the trend of the market, what trend the market is. For example now, I'm in the 1 hour time frame. If you are seeing this, what the fuck? This writing that I wrote here is much. Let me read some of them. Let me just read some of them so that you guys will be able to see the charts clearly. So you guys are seeing the charts clearly, right? So on a higher time frame, if you look at this chart clearly, because what in the 4 hours time frame, you will notice that the market is in a bullish trend. That means I have a bullish bias on this market, right? So most of you don't wait for exact market structure. You usually ignore it, and also not using a stop loss. How will you be entering a trade without a stop loss? And your papa get the market, even though na your papa sef you go still chop stop loss. So always use stop losses, guys, and also forcing setup instead of waiting for clearance. You no see your setup, close your phone, close your laptop, go rest. Don't force setup, guys. I repeat, don't force setup. If you no see your setup, be patient, be calm, go and sit down, rest, or maybe find another thing to do. Don't force setup, right? Trading like smart money means acting smart, guys. You don't have to just jump into every move or something that you see. Just wait for your setup, okay? Wait for your setup. So the brief stuff that I want to tell you guys on this strategy is in a bullish market, right? Let me just give you simple beginner strategy that you should understand. In a bullish trend, see, market is going up, right? Wait for markets to form maybe liquidity within your point of interest, right? And wait for price maybe to take out that liquidity and tap you in before heading to your direction. This is in a bullish market. You might see this as rubbish, but you see these zones now. Let me use for example these zones now. See these zones, all these three zones here like this, right? These are what liquidity. Then this is your main area of demand that led to this break of structure over here. So just practice, guys. Anything that you don't understand, you can just come back and ask me, okay? That's why you are in the mentorship. You can come back and ask me. I will give you guys a feedback on anything. This is the break structure, BOS. This is what liquidity, right? Then this is your order block. Then we also have an imbalance within here, within this zone. So don't forget, you need an imbalance too. So we also have what? An imbalance IMB within this zone. Let me just zoom out a little. So look at it, guys. You're seeing it, right? I prefer my stocks in capital letter. I don't know why. Yeah. So look at it in a bullish market, right? And in a bearish sense, it goes the other way around. Let me see. Look at something like this now. Right? This is your this is your um supply or order block. I call it order block. Then this is your breakup structure. That is BOS. Then this right here is trend line liquidity. So liquidity and liquidity. Someone just go like that. That means you write trend line liquidity, blah blah blah. This class is already taking too long, so I just want you guys to rest. Then this is the structure that price and broken. And this is our target for the TP. What your target? Then you might enter here. You are seeing it, right? Then also, if it is this is in a continuation model, then if price want to change, maybe price is going bullish, right? And they want to change to bearish. See something like this, right? You need what confirmation before you enter. I mean, so the market might be somewhere like this. This is a breakup structure. This is another breakup structure, right? Then this is a change of character. This is a change of character. Then this is where price did what? Created liquidity. This is a liquidity it price created, guys, and swept it. You are seeing it, right? So price swept this liquidity right here. So and within this zone here is your point of interest, which is your order block. So you have your order block right here. Then that is it, guys. This is what in a market structure shift. This is what you use as your entry. Then you might target the next liquidity. Might be a low, right? And you target it as your point of interest. Then boom, that is just it. So you can use a lower time frame to confirm this and exactly with this kind of movement in your lower time frame too. So maybe you enter here, you want to go to a lower time frame, right? You can zoom in to a lower time frame point of um after price have tapped your order block, maybe supply or demand in a higher time frame, zoom into the 15 minutes and wait for price to change character. Let me see. If this is your point of interest, right, and price have tapped it, you can zoom into the 15 minutes and wait for this kind of scenario. Let me just draw it, guys. This is where price tapped it, right? Wait for after breaking this low. Let me carry this thing come back. After breaking this low, right? Wait for price to pull back, create liquidity, or without creating liquidity, at first it has tapped your higher time frame point of interest and change character. You can just set your orders in the what in the point of interest that you saw there. What is wrong with this stuff? I thought I've do this stuff. So you can just something like this. You network is quite bad. Let me just show you guys quick before we end this class. Something like this, right? Let me zoom out. So if this is your lower time frame now, maybe 15 minutes, 5 minutes, you can just use the other block here to get what a more better reach reward ratio, right? And just scalp the movement. So with time, you guys will understand it. Just analyze this stuff and drop. Analyze this stuff and drop. So in case of there's anything that you don't, the more you practice this, the clearer it becomes. Don't just sit down and listen to me. Okay, don't just sit down and listen to me or wish that you are like me. Okay, practice all this stuff that I just taught you guys now. Practice it. With time, it will become clear to you. So, do you guys have any question you want to ask me before before we end the call? Do you have any question? There's no question, right? Okay, so thank you guys. Okay, thank you guys. See you in the next class.